But overall, gold is in a strong trend. The next stop, I think, is about 2700 based on the longer term charts. If we look at the monthly chart, it's very clear we're in a bull market phase. People give up on it. People are super impatient. So give it a bar or so, and then boom, we could see this up at 2700,
Yeah.
which could coincide with the stock market, struggling or even moving lower. And eventually, if gold hits 2700, that actually might be, the time where the stock market is now actually really about to collapse in a much bigger way. But silver's got potential to rally to roughly, if we were to look at it, somewhere right up to around $36 an ounce, which is a fairly significant move. So
Gold has transitioned into a bull market phase, surpassing its targets and exhibiting increased volatility, according to Chris Vermeulen, chief market strategist of thetechnicaltraders.com. Despite recent consolidation, the overall trend for gold remains bullish. Gold prices maintain a subdued tone near their lowest level in over 2 weeks during the early part of the European session on Tuesday, while holding above the $2,300 mark. From a technical standpoint, a sustained break and acceptance below the 23.6% Fibonacci retracement level of the February to April rally could indicate further intraday downside movement. Vermeulen acknowledges the current market volatility, which is driven by short-term trader reactions to price fluctuations. However, he emphasizes that such fluctuations are a natural part of the market cycle and anticipates gold will resume its upward trajectory. Despite being approximately 4% below its all-time high of over $2,400 achieved earlier this month, gold prices have still seen a remarkable 14% increase this year, outperforming the S&P 500's 5% return. The precious metal has experienced a significant surge in value in recent years, with prices soaring by more than 50% since February 2020, just before the onset of the COVID-19 pandemic, and nearly 20% in the last 2 months alone. The recent sell-off in gold can be attributed to various factors, including a slight price correction following a historic rally across asset classes as investors take profits and portfolio managers reposition. Vermeulen further analyzes longer-term charts and identifies key Fibonacci extension levels that suggest a potential target range of $2,600 to $2,700 for gold. This projection aligns with the bullish trend in the monthly charts, indicating continued optimism for the precious metal's future performance. Come along as we explore the valuable insights provided by Chris Vermeulen. Don't miss out on our latest updates. Subscribe to our channel and activate notifications. Thank you for tuning in.
I'd say gold is broken out. Gold's in a bull market phase. It's reached its targets. You and I had talked about these Fibonacci targets from before, how gold came up, hit this target, and we're expecting volatility and some type of pause, which is what it's doing. A lot of, everybody seemed to be getting totally sucked into gold and silver and miners, and everybody wants to talk about it and wants to own it. And I keep telling everybody, just be aware, we've hit a target. It needs to take a breather, just like over here. We need a pause before it goes higher. So this is really good price action. I think the fact that it's stalling here and consolidating a little bit is a good sign. It's definitely frothy, just because everybody seems to be talking about it, and people who are getting in have chased pricing. We saw volume ramp up in a big spike in gold. So there's been lots of people piling in, and now it just needs a bit of a breather. But like right now, it's just trying to work off the short-term traders. Anybody who got in late is now panicking. This big red bar triggers a lot of fear, and they'll eject out of the trade. But overall, gold is in a strong trend. The next stop, I think, is about 2700 based on the longer-term charts. If we look at the monthly chart, it's very clear we're in a bull market phase. If I just zoom out here, we can see with a Fibonacci extension, we've got this rally and we had this controlled pullback. And the next upside move is, right up here, 2600, 2650, somewhere in there. And right now we're at the 618 level. So it's blown up through this level. If it pauses here for a couple of bars or a bar or two, then it's most likely going to run up and hit 2600. And I believe it could pause for a bar or so, which is a month, take a bit of a breather, shake people out. If it doesn't shake them out, the market will generally wait them out. So people are expecting gold to just keep going. But if it trades sideways long enough, people give up on it. People are super impatient. So give it a bar or so, and then boom, we could see this up at 26 2,700,
Yeah.
which could coincide with the stock market, struggling or even moving lower. And eventually, if gold hits 2,700, that actually might be, the time where the stock market is now actually really about to collapse in a much bigger way. It'll be interesting to see how all this unfolds. I think a little pause here is what it's starting to do. But what's nice about gold is, for example, if I won't pull it up here, but long story short, people are into gold miners and silver miners, and we're in a window right now, which actually the cycle chart here shows it very clearly, that we're near this blue cycle. Here is a stock market. Here's a stock market top. Typically, precious metals and energy stocks do very well. Same with industrials, capital goods, which they're screaming higher as well. What's interesting is this is just the type of market condition that even if we get panic selling in the stock market, this pocket of stocks can buck the trend. And so we saw this back in 2008, where precious metals and precious metal miners and energy miners and the industrial sector kept moving higher, while the stock market even started to sell off, even with panic selling. And so we're in this one particular sweet spot that no matter, even if we get panic selling in the stock market, these assets, I think, could still hold their ground. I personally like precious metals like gold or silver better than the stock plays. And if you were to look back in time of how miners moved versus gold and silver when the 2008 stock market topped, keep in mind, miners are stocks. They're in the stock market. So when there is selling in the stock market, it's naturally pulling down on those miners. They might still be able to grind their way higher, but very, very small moves. They'll be able to make nominal new highs. But gold and silver, they're not in the stock market. They're a commodity. They're disconnected. So they don't have that bear market pull on them of panic selling. And so they can continue to rally, which is why we're seeing them kind of, especially gold, really run free and wild to the upside, because it's not directly connected into that stock market and that emotional wave of selling and things like that.
Chris anticipates that silver has the potential to rally to around $36 per ounce, drawing on historical patterns and technical analysis. He suggests that silver's rally may coincide with a struggle or decline in the stock market, as precious metals like silver have historically performed well during market uncertainty or downturns. Despite this potential, silver traded on a softer note for the second consecutive day, around $26.95 on Tuesday during the early European session. The easing fear of broader Middle East tensions improves market sentiment and creates a headwind for the precious metal. Additionally, traders opt to wait on the sidelines ahead of the U.S. preliminary S&P Global Purchasing Managers Index (PMI) data for April, which is due later on Tuesday. Chris suggests that silver may catch up to gold's recent highs, presenting an opportunity for investors due to its speculative nature and potential for higher gains. In technical analysis, silver bulls maintain a solid near-term advantage, with prices in a 9-week uptrend aiming to surpass solid resistance at $30. Let's get back to the interview.
Yeah, I like silver a lot. It's right up into resistance. It kind of got right up to these highs that we saw back in 2020. It's had a really nice pop. Let's take a look at the monthly chart for a kind of a bigger view here. But silver's got potential to rally to roughly, if we were to look at it, somewhere right up to around $36 an ounce, which is a fairly significant move. So, for example, when we saw it back in 2006, 2007, we saw like the multi-year consolidation. Gold, silver miners rallied up into the stock market top. In fact, some of the biggest months here was when the stock market was starting to fall and metals kept going higher. Gold and silver did very well. We've just had a consolidation. We're starting to see silver run up. I think it could run up to 36. And then the stock market, it will start maybe a stage 4 decline. It'll definitely be struggling, I think, over the next few months. And then silver could pull back and consolidate. And gold would do the same. And then I think we're off to the races for very significant moves in silver. So I like silver. I think gold, silver, I think all of them have upside potential here, but there will be some type of pullback. And the question is, how much will they pull back? Because the last bear market that they did this same scenario, we did see silver pull back about 61%. It's quite a haircut. If you're expecting to the moon and not looking back, to get hit with 61% could hurt. So it'll be interesting to see where this goes, and then how far is it going to pull back during the next bear market. I believe it'll hold its ground fairly well. I think we're in a kind of a very good storm for people wanting to be into metals. I think it'll be supported fairly well versus big panic in that space. But we'll just have to see how that unfolds. I mean, if you just look at the chart, silver is way down here, gold is equivalent to up here. So gold's hitting new all-time highs. So you'd think silver will play catch up. It generally does. I think if the ratio is high, it might be better to have a little more weighting in silver simply because of that potential. Yeah, I don't use it for trading, but it definitely shows silver and miners, I think, move very similar simply because they're both more of a speculative play. They get hit really quickly when there's panic. They drop, they get sold down. Where gold is kind of accumulated, people who buy gold just kind of sit on it forever. They know it's slow moving. They're not really looking for massive gains. They're looking for stability, consistency, a safe haven. Silver and miners are like people want to make a ton of money. They want to hit that grand slam. And when it starts to backfire on them, they panic out and it drives the price back down. So it's just a bit different mentality in how they move. Yeah, gold's taking off, so everybody wants to go and play the leverage play around them. I mean, miners have had a very big move. They always outperform percentage-wise, but miners are still really trapped. They're still making long-term lower highs. They've had a really nice run, but they're into major resistance. Percentage-wise, yeah, they've done very well, but they're not breaking free. They're not in like this, all-time highs, no overhead resistance. This is what has me thinking that, gold is going to have a nice run, but I don't think this is the start of a huge, huge rally in the precious metal space yet. I still believe, I still believe miners could actually rally fairly significantly and break up towards that $40. But overall, I still think we're going to eventually go into a bear market. It will pull even gold and silver down later this year. And then when the market starts to recover, I think that's when the miners and precious metals will start their much bigger run, which, gold will probably be in the 3,000 range beyond, and miners will start a multi-year rally and probably blast past the 2011, 2012 highs that we saw, a decade ago.
According to the latest industry data, demand for silver from the solar panel sector jumped 64% last year, rising more sharply than previously estimated. This dynamic is expected to help underpin prices for the precious metal. Could increased demand from the solar panel sector be a key factor in supporting silver prices moving forward? Share your perspective in the comments below. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.